What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. Make sure you hit that like button if you haven't already. It really helps the channel grow, as well as subscribing and hitting that notification button. That way you are alerted to when we release new videos. We do release bonus content from time to time. Now the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades up to long-term swings or leap trades as well. So if you want a deeper dive into exactly how we're setting up our chart, make sure you check out that bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And also, if you are not familiar with the STRAT, make sure that you check out the description of this video. We've got a link to a free quick reference PDF for you here. Give you all the basics for the STRAT. All right, it's the basis of the charting and trading method that we use. So make sure to check that out if you haven't already. And yeah, I just encourage you to join us for the full video. We do go over triggers and targets, especially in a short-term time frame, but we do go over price action and insight on all time frames. So, hang with us. I'm sure you'll be glad that you did. And let's go ahead and take a look at the agenda for today. First, we'll go ahead and recap the price action from Thursday, February 5th. And we'll zoom out like we always do, look at the week, month, quarter, and year price action. Then we will take a look at the market maker's expected move for Friday, February 6th. And then finally, we will zoom back in to set our 4-hour markers and the triggers and targets for Friday, February 6th. Then we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so just jumping into the charts, starting with the 5-minute chart like we always do. This is how we can capitalize on our proven and repeatable strategy. For either early scalps, when the market is first opening, or for early entries into longer day trades, right? So the methodology is watch for the opening print or the first traded price of the day, and from there, look for higher lows at or above that opening print to get into calls, targeting overnight high and previous high a day. And then if you get price action that pushes to the downside from price opening, you want to look for lower highs at or below opening print to get into puts, targeting overnight low and previous low day. So today was a bit tricky, right? So playing it from the 5-minute wasn't a lot of help, because you can see, we obviously opened right here, shot straight up. You basically would have had to just, do a blind trade, as soon as the market opened to get into this. There was probably a higher low on the 1 minute, somewhere in there. But yeah, unless you're looking at the 1 minute or just buying it open, which you would kind of need some reasons to just buy blindly at open. Otherwise you're just gambling, right? But anyways, if looking for a trigger on anything on the 5-minute or higher, there wasn't really anything there, right? So if we look at this from like a 5-minute perspective, obviously these are the lows at the end of the day on Wednesday, and we've already gone below those, so we've made a lower low. Then we shot up here and we went higher than the last high on Thursday. On Wednesday. And so we've made a higher high. So we've essentially just made a broadening formation. Oops, let's get the right tools out here. All right. So high to higher high, or if you want to use this high, either way, high to higher high, low to lower low, right? Even if you use this low to that lower low, right? Oops, there we go. We've just got a broadening formation here, right? So not a lot to pull from that. Now, let's get rid of these real quick. Get these out of here. There we go. So, so we did, pull back basically all of what we, pushed up in the morning. Thin structure here on the way up was easily retraced. And then we came down here and we made a lower high at the opening print level. So we went ahead and took that, right? Now, granted, we are at, this 5076 level, which was last quarter's high, last year's high. And there's overnight low right here, and then previous low day not too far down from that. So those could be all looked at as areas of support. We bounced off of this level yesterday, essentially. So would we get another bounce there? Especially with the other levels of support right here. That's kind of what we got, right? So we bought puts, as soon as we went two down on this, or below the low of the 2 up here, locking this 2 up in as a lower high. And then, it started to look good at first, but overnight low is what caught us, right? So obviously that's the first target when you're looking to the downside, but there was no real magnitude there. So we could have took some profit there, but it would have been real small, right? So we allowed it to do its thing and see if it would make a lower high, just to continue its trend down. Maybe it's got to move a little sideways first, or maybe it'll be a slower drop than it was yesterday. But instead of making a lower high, it actually made a higher high. So once it did, we went ahead and sold. And that's how the game is played sometimes, that's how the game's played all the time, right? Sometimes you win, sometimes you lose. Hopefully your strategy puts you in a position where you're winning more than losing. And we've been doing a lot of winning the last few months, really. And, really since we started the channel and before that. But you got to take losses at times, right? And luckily it wasn't that large of a loss. So it was about $1 worth of movement in there. Went ahead and took our loss, licked our wounds. Now, what you have to kind of understand when you have these big moves like this on the 5-minute, it's going to be hard to get a trigger that will allow you a good risk to reward ratio, meaning like where is your sell point, right? If you were to buy puts here, you could have been rewarded because we pushed down, but we never came back up to it. But that's not always the case, especially with all that volatility in the morning. So you got to be kind of careful with that. And then another thing that you probably want to do is start looking at the higher time frames, right? So you look at the 15. Let's get just today in here. Actually, we'll get a little bit of yesterday too, just to show relationship of highs and whatnot. So here's the first candle on the 15-minute from Thursday, February 5th, right? We did get that and we got the push up, but what that did is gave us a 3 failed 2 up, that is. So very good opportunity for a 3 2 up 2 down. And that's really what we missed, right? We should have been looking at that instead of the 5-minute and then taking the lower high here, because we're at market makers expected move low for the week, but we're approaching it from the bottom, so it's no longer really a level of support or an inflection level that would kind of reflect support. It more reflects resistance at this time, right? We've got the 150 fib extension of the April 7 bull flag right here as well. So reasonable spot to put a little bit more risk on the table from the standpoint of, you're pretty far above that opening print level, right? And this is the nuance that we kind of talk about, from time to time when we talk about this strategy. But again, you're making a higher high after a higher low on the 15-minute chart, essentially. And, you got another broadening formation. So it's a lot higher risk play, even though the strat reversal is there with 3 2 up 2 down. And you can see, we went 3 2 up 2 down and it reached magnitude. It didn't reach it in that first 2 down, but this combo 2 down essentially completed that magnitude. So what we did at that point, right, since we got triangled out here, we watched the movement, and then we're watching the 15-minute, the 1 hour, higher time frames, and we saw the opportunity for the lower high on the 15-minute. So that's what we did get. But again, we were above opening print. We know that this is a pretty decent level of support, at least intraday right now. So we held off on, actually taking that 3-1-2 down reversal. We're glad that we did, because it did end up finding support at that 50.76 and then essentially made a higher low. So we capitalized on that by entering calls on this higher low here, pushed up, and we got to that 150 fib, and we saw it was starting to go sideways. So we did sell a little bit of our position at that point, but we held out until we could get a lower high, and that's essentially what we did. So went sideways, pushed down. We did make a lower low, but keeping in mind, we made a broadening formation on the 5 and 15-minute previously. Could we just be making another broadening formation here? So we did let it go lower low, still in profit. We did get the pop back up, but then as soon as we went lower high, this candle went below the low of this candle. We went ahead and sold the rest of our position in those calls, and actually took, let's go to the 1 hour, took the lower high on the 1 hour, right? So get a little clearer chart for you. So if we look at the 1 hour, we allowed this stuff to play out during the day. Here's your lower high. Wanted to wait on grabbing any puts with this first lower high, because there was obviously the opportunity, with this sideways action of the opportunity for the trend to change, right? So although we made the lower high, it could have just been a quick push down to make a higher low to continue to start an uptrend and continue pushing up, right? So held off on the lower high entry here. Looking at how far we've gone down over the past few days, we've got this 4-hour broadening formation right here. We've got the market maker's expected move low, a lot of levels here. So we wanted to wait for a little bit more confirmation on the 1 hour. We've got that, and we went ahead and entered some puts. We did end up swinging those puts overnight tonight, and we do still have some of our SOXS calls that expire on February 20th. So that's how we worked today. Shows how sometimes with that early morning volatility, you got to come off of those smaller time frames and look for your triggers on the higher time frames there. But things normally will play out if you have some patience. And again, like we said yesterday, sometimes the best trade is to not trade at all. So if you didn't pull the trigger, that's fine as well, because you didn't lose any money, right? So they ended up today net profit, right? We did lose on the first set of contracts that we bought, the puts to the downside, but we were able to recover a bit on the calls, right? Basically put us back at even. I think we're slightly green on the day as far as total profit after we made that sell, and then we obviously ended the day green unrealized. But let's see, after hours, we're down here at 51.49. So looking decent so far, but we've had some pretty big swings overnight, the last couple nights. So we'll see where everything shakes out tomorrow, but that's where we sit. So let's look at the 4 hour real quick. We talked about the 1 hour possibly trying to change trend. The 4 hour, haven't really got anything from that right now. It did set up a possible 1-2 up combo 2 down, right? Combining this 1 with a 2 down to trigger this, bring us down to the low of the candle to the left of the 1. But if it does that, it also could possibly set up a 1-2 down 2 up back to the upside. So again, patience is the play here. Kind of looking bear flaggish here. If you look at things with the big drop and then consolidating. But, again, patience is the key. We've got this 4 hour broadening formation that we're trying to hold on to here, but we've got a lot of resistance above. So we'll see what happens coming up. And, just looking at the market maker's expected move, it does look like we might press back to the upside. So we'll see here in a second once we get into that. Let's zoom out a little bit more here. Look at the 1 day chart. All right. And we can see that, again, it's like what we talked about. We pulled back to the top of the range from the end of the year, right? That 46.79 to 50 area was that resistance level that we had from October all the way through the end of the year before finally breaking back through it. We had a little bit of a retest, from a day perspective here at that level to get the bounce. But from a weekly perspective, we really hadn't, and that's, looks like what we're getting here. So from a day perspective, inside day, it did close green. So that's a little interesting, but it's still in the bottom half of the previous day's price action. So, got to keep on our toes again tomorrow, because if we do go 2 up in the first 4 hour candle of tomorrow's price action, unless we just go with some real big momentum, reach magnitude there, and then continue pushing, there's always that chance that we get a 1-2 up and then a 2 down in the second 4 hour candle of tomorrow's price action. So keep that in mind. Just same as reverse on the other side, right? So if we go 2 down in the first 4 hour candle of Friday's price action, watch for a 1-2 down 2 up reversal back in that second 4 hour candle of Friday's price action, right? So patience is the name of the game, especially on the short term perspective. Hour seeming like it's trying to change trend, but again, I don't know how many times I can say patience, but that's really what it is. Wish I could give you something more here and say, yeah, we're going back to all-time highs at this point, or we're going to go back here and fill all these gaps. We just don't know, because we're at the edge of that range, right? The edge of the top of the previous range that we were in, and the bottom of this new range that we've been in since the beginning of the year. So just stay on your toes. We do have this small sliver of a gap right here at 47. And then the gap at 45 here as well. So, yeah, just stay on the lookout for that. Let's see the week chart. This is what I was talking about as far as pulling back and retesting the top of the range from a weekly perspective, right? From a weekly perspective, we just broke through and just ran up, right? 1, 2, 3, 4, 5 straight weeks of green price action, right? Now we're getting this pullback. Are we gonna, turn what was resistance into support at this point, right? And it may take another week, right? We may get this 2 down, and then it may take a failed 2 down next week. Go fill these gaps and hammer back up by the end of the week, and we maybe we go 2 down, 2 up in the following week after that, setting a higher low here on the week chart. We don't know. We've got to be patient. Once again, got to be patient. But for right now, like I said, switching to neutral at worst, right? At this point, need to see a little bit more pullback, a little more violation of a few more rules, maybe some lower highs on the at least the 4 hour, if not the day, before we really start turning bearish. We've actually been calling for this type of pullback for better positioning if things are going to continue to push up through the end of the year, and just to get a little bit of price action to the downside, sell some calls, buy some puts, and get some more cash to buy some more shares, right? That's what we've been looking for. So again, from the week perspective, not the worst thing in the world. Looking at it from the month perspective, zoom in here a little bit, right? We're still inside on the month, right? So we are possibly threatening this 1, 2 up, 2 down reversal that would bring us all the way back down here to this $27 level. But until that triggers, we got to stay, neutral, because we are in an uptrend, right? This was a higher low and we went higher high. So, again, patience is going to be the key. We could just end up getting some bullish consolidation and moving sideways. But we're very early in the month, 5 days into the month, 4 trading days into the month. So, again, patience is going to be the key. The quarter, we ran the STRAT, right? And that's what we were looking for. So we're just kind of waiting for the next quarter to see, are we going to go with the continuation, or are we going to trigger a 2 up, 2 down coming from a higher high and looking to set a higher low and continue the uptrend, or are we going to have a more drastic pullback and fill this gap here, we've got a gap here, gap here, gap here, gap here, gap here, basically all the way back down to April's low, right? One thing I'll just bring in real quick. Let's look at April on the week. Microsoft. This was the April low last year. Microsoft has basically retraced it, right? And Microsoft is one of the biggest components in the QQQ, one of the biggest components in S&P 500. So, we've got to look at things as, is this a leader here as far as the pullback? Or is it just for whatever reason being hit harder than others in the tech sector are going to be hit, right? Are others going to follow along this path and retrace pretty much everything they did back to January? We'll see. But for right now, looking at SOXL, which this channel is focused on, we're quite a ways away from that, right? But we have had a good run, so it's not unreasonable for this pullback, right? So there's that quarter again. 1 combo 2 down, combo 2 up, reached magnitude. We're all good there, right? From the year perspective, same type of thing, right? We got the 2 down, 2 up, reached magnitude, ran the STRAT. Only thing left to target is all-time high in blue sky territory. So, especially after opening the year with such a strong push, seeing this pullback isn't the worst thing in the world. Even if we go 2 down, we're coming from a higher high and a higher low, so technically an uptrend, and we've got room to pull back before making a higher low if we're going to continue an uptrend. Now that would probably be a longer pullback, but again, it's not a whole lot that's totally bearish that I can say from a long-term or a higher time frame perspective. Yes, things have taken a turn on the smaller time frames. We've talked about those, and that's why we keep triggers and targets on both sides of the equation, ready to go whichever way price action goes. But from a high time frame perspective, there's still got to be some more breakdown that happens before we really start to get worried, right? Doesn't mean we haven't been buying puts and sold some calls over the last few weeks, because we've definitely been doing that. But yeah, that's what we're looking at. Let's go ahead and take a look at the market maker's expected move for Friday, February 6th. And to do that, let's go ahead and bring up our options chain. So here's Thinkorswim. And looking at the options chain for February 6th, we go over here to the right, and we've got a number in parentheses that's plus or minus $5.19. So the market makers are expecting a plus or minus $5.19 move from the close price on Thursday, which is 53.25. Right. So let's go to our notes real quick. Again, Friday, February 6th, 227 trading days left in 2026. Close price on Thursday, February 5th was 53.25. We know that the week and the month are red, but we know that the quarter and the year are still green. So conflicting time frame continuity, but the higher time frames are green. We know that the expected move for the week was plus or minus $8.30 from the close of last Friday, which gave us a expected range of 70.09 to 53.49. We've obviously gone below the expected low. Again, that is not an end-all be-all level. It is about 70% of the time they're right. It's derived from it at the money straddle for on the options chain. So there is a mathematical reason for this range. But this week we happen to have gone below it. Now we know the price expected move for Friday is $5.19. So add that to 53.25, you get 58.44 for an upper bound, and subtract that from 53.25, you get 48.06 as a lower bound. So if we take a look at that on the chart, what does that tell us? Not a whole lot, other than if the market maker's expected low is respected, we could have a gap fill and then bounce off from there. And then if we go to the upside, we're just testing last month's 50% level again. So not a lot of movement. It looks a little bit more to the upside than downside, just visually, but it's the same on each side of the close price. So that's what we've got. It would give us a 2 down on the day and a 2 up on the day. So yeah, just got to watch it. Decent size movement that we can have there. Total of $10, a little over $10 that it could move from top to bottom. So just like this morning, we had the big move from the low up to the high, back down to the low. Same type of thing could happen tomorrow. But anyways, that's where the market maker's expected move leaves us, right? High around the last month's 50% level, and the low right at that gap close here at 48. All right. So let's go ahead and, with that in mind, switch to our swing our scalp chart and look at the 5 minutes so that we can talk about our strategy for tomorrow. All right. There we go. So on the chart, we have the 4-hour markers, all right, and those are previous high a day, overnight high. Of course, that can move by the time price opens. Overnight low, of course, that can move as well, and then previous low a day, which will stay. So those are the 4-hour markers, except for one, the opening print, and obviously we have to wait for price action to open in order to put that on the charts. But let's say 51.14. Yeah, let's say we stay towards the lower end of the opening. Of the overnight trading action, and we open towards the lows. Right. Just using the strategy that we use, every day. Watch for the opening print. If we get price action that pushes up, maybe hits this fib extension from the April low and pulls back a bit, but we get a higher low at or above that opening print level, we want to look to get into calls. The targets for that move to the upside would be overnight high first, and then previous high a day. Now, obviously, if overnight high goes above previous high a day, and after hours, previous high day would be the first target, and overnight high would be the second. But those are the targets to the upside: overnight high, previous high day. So higher lows at or above opening print, looking to get into calls. targeting overnight high and previous high day. Now, if we open and we push down, excuse me, and we get maybe a bounce off a previous low day and push back up, but then end up getting a lower high at or below opening print, we want to look to get into puts. Obviously, no real magnitude there for overnight low, and really not even for a previous low a day either. So you would be looking for follow through to previous low a day, but in just sticking to the rules of the strategy, the previous low a day would be the final magnitude for the move that you're taking off of the opening print. Now, again, if we reach that with some type of momentum or get some corrective activity and start moving sideways, you can obviously still stay in those trades and watch for any type of signal that going to progress to the downside or reverse back to the upside. And keep the 4-hour triggers and targets and 1-day triggers and targets in mind. Even at this point, the 1-week triggers and targets as well, which we'll go over here in a second. But again, just overnight high. I'm sorry, higher lows at or above opening print, looking for calls, targeting overnight high, previous high day. Lower highs at or below opening print, looking to get puts, targeting overnight low and previous low day. All right, so that's that. Let's go ahead and switch more to a swing trade or a full day trade perspective. Looking at the 4-hour time chart, we talked about on the 1 hour that technically we are still in a downtrend. Come on, there we go. And we've yet to determine whether or not we're going to put in a lower high on the 4-hour. Now my guess is at some point we're going to put in a lower high, right? We would have to get, let's see, we closed here at 53 and we'd have to get all the way up here to 67, 62 to make a higher high. So again, the question isn't necessarily are we going to put in a lower high, but if we put in that lower high, are we then going to put in a higher low or a lower low, right? So again, patience is kind of the key, especially from a swing trading perspective. Because we're getting a lot of noise on the shorter time frames, right? So if we do go to the upside, that does give us a 2-1, 2-up reversal or continuation in this case, because the 2 was a green 2. Obviously entering at the high of the 1 and the magnitude of that move being the high of the 2. So the high of Thursday's price action, right? Now again, we've got some triggers and targets for going past that, which we'll go over here in a second, but for all intents and purposes, on the 4-hour chart, we would have a 2-1, 2-up continuation to the upside, entering at the high of the 1, exiting at the high of the 2. If we go to the downside, that gives us a 2-1, 2-down reversal, entering at the low of the 1, exiting at the low of the 2. But keep in mind, that does give us, if we hit the low of the 2 and go below it, that then triggers a 1, 2-up, combo 2 down. This 1 and the 2 down flag from tomorrow, if that's what happens, 2 down candle, if that's what happens, that first 4-hour candle, the 1 and the 2 down would combine to make a combo 2 down, making a 1, 2 up, combo 2 down, right? Just kind of the reverse of what we just ran on the quarter, right? And then the magnitude of that 1 combo 2 up, 1, 2 up, combo 2 down would be the magnitude, the low of the candle to the left of the 1, right? So that would be down here at 49.33, right? So first, if we go to the downside, in that first 4-hour candle, right, triggering at 52.28, first target would be 50.01 down here, which would then trigger this 1, 2 up, combo 2 down, which would then target 49.33, right? And of course, we got this gap down here with market makers expected to move low down here as well. So don't be surprised if we were to go through and continue to the downside. All right. Now on the day chart, we talked about the upside on the 4-hour. On the day chart, again, we had that inside candle, inside day. So if we do continue to the downside, that gives us a 2-1, 2 down continuation, entering at the low of the 1, exiting at the low of the 2. So not a lot of magnitude there, and it's not like there's another 1 combo 2, 1 2 up, combo 2 down on the day as well to continue to the downside. If it runs that strat, that would be it, and then at that point we're just looking to take out the next low, which again is right at the top of that gap that we've got here, right at 48. All right. Now to the upside, we would have a 2-1, 2 up reversal, more magnitude on this move, right? Because we're entering at the high of the 1 and exiting at the high of the 2. Now keep in mind, you may not want to exit your full position, because this if we get to the high of this 2, then that gives us a 3 2 down combo 2 up, which then targets the high of the 3 all the way up here at 67.62. Right now, there is a lot of resistance to get through. Market makers expect to move high. Last month's 50% level, the week and month flip, last week's low, this monthly broadening formation, right? This fib extension from the April 7th low, last week's 50% level. It's a lot of resistance to get through if it does get through it. But the magnitude of that move is up here at 67.62. So, buckle up if we do go that direction, and especially if it's with some momentum, right? So more of a domino effect type of move to the upside, as opposed to what we've had over the last couple of days, where we had a domino effect to the downside. So take from that what you'd like, but that's what we've got from the 1-day chart, right? Let's go ahead and look at the hard numbers here in the notes, right? We know that there's no gaps above. We know where the gaps are below. We know that from a scalping or for an early entry into a day trade perspective, we want to look for higher lows at or above opening prints to get into calls, or lower highs at or below opening print to get into puts. Otherwise, we go in here off of our 4-hour 1-day and the rest of our triggers and targets, right? So we talked about the 4-hour chart. If we do go to the downside, that triggers a 2-1-2 down continuation, triggering at 52.28 with a magnitude of 50.01. And if we get to that 50.01 and go below it, that then triggers a 1-2 up combo 2 down, which has a magnitude of 49.33. Now we know how the bottom has been kind of dropping out here, so 49.33 is only $3, and we know how SOXL can run if it starts running. So if it does continue to the downside, we do have some extended targets here, starting with the gap close there at 48.09. To the upside on the 4-hour chart, we talked about a 2-1-2 up reversal triggering at 54.41, magnitude of that move being 55.49, and we've got some extended targets out here for you. I don't know why that 6103 is out there, left over from yesterday. Sorry about that. But yeah, 2-1-2 up triggering at 54.41, magnitude being at 55.49, and then we've got these extended targets out here for you. On the day chart, if we go to the downside, we get that 2-1-2 down continuation triggering at 50.01, magnitude of that move being 49.33, so not a lot of magnitude there, but we do have some extended targets out here for you. Again, starting with that gap close at 48.09 and continuing on down. To the upside, we would have a 2-1-2 up reversal triggering at 55.49. Again, the magnitude of that move being 61.03, but because that is pretty good ways to go in the face of a 1-hour and 4-hour downtrend, we do have some intermediate targets here for you. These are levels that we feel we could see price either go sideways or reverse back to the downside. If we do reach magnitude at 61.03, we do have some extended targets out here, because again, if SOXL gets running, if we get the right news, catalyst, whatever, we could get really run into the upside. Do I think that's going to happen? Probably not. Even if we do bounce, I don't know that we're going to reach magnitude of the 2-1-2 up, but it's worth a shot, right? Now on the week, we triggered the 2 up, 2 down at 59.60 and reached magnitude at 57.62. We're obviously below that, hitting some of our other targets, but we do have some more targets left out here. 48.09, again, that gap close, 46.79, that major resistance level that we were running into in 2025 and then beyond, right? 3 to go green, 3 on the week, or bullish engulfing on the week. We got to get up to 71.98. Yeah, I'll just say right now, I don't think that's going to happen, or it's not going to happen. Anyways, on the month, again, we're inside. Really need to defend against that 45.08 level so that we don't trigger this 1-2 up, 2 down. If we do trigger, first target would be 35.70, but ultimately the magnitude for that move is all the way down there at 28.12. So again, need to defend that 45 level pretty good. To go 2 up on the month, we got to get up to that 71.98. So again, we may not do it tomorrow, but we've got 3 weeks left in the month. So give it some time, and especially if we can defend that 45.08 level, there could be more upside for us. On the quarter, we talked about how we got a 1 combo 2 down, combo 2 up. ran the STRAT, reached magnitude at 70.08. So not unreasonable to see this pullback that we're seeing. Same with the year. We ran that 2 down, 2 up STRAT, reaching magnitude at 70.08. So once again, not crazy to see some pullback here. All right. But there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Try to jam in as much information as possible without taking up too much of your time. So I hope you did enjoy the video. If you did enjoy the video, you made it this far, go ahead and give us a thumbs up. It's free. This channel's free, so we think it's a pretty fair exchange. And then if you think that this video may help someone else in their trading, go ahead and give it a share as well. Because the strategy doesn't work for just SOXL. It works for any ticker that's publicly traded in the U.S. stock market. So pass it on along if you think it might help somebody. All right. But at this point, we'll go ahead and wrap up the video. Wrap it up like we always do. If you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.